Our guest is from Bank to the Future. So he will describe about how crypto market has been changed over the years. He can talk about about altcoins, bitcoins, and other crypto digital assets. Uh, so please welcome Simon Dixon from Bank to the Future.
Thank you. Just while he's figuring out the slides, I've been living in Hong Kong for the last 3 years, and it's been an amazing experience for the last 3 years to see the rapid change in this market. It seems to me that Korea has a really perfect opportunity to leapfrog some of the legacy issues and legacy industries like Silicon Valley and Wall Street. And that's exactly how I see them right now, as legacy products and institutions. I think over the next few years, Korea is going to really shape and determine where it wants to be. It could follow the path of China and decide to cut off all the liquidity because it wants to control the market and make liquidity banned. Or it could follow the path of Japan, where they decided to embrace the market, take it head on, and potentially become one of the next superpowers as a result of this real shift in financial history. Or Korea currently sits somewhere in the middle, where it seems like it hasn't decided which path it wants to take yet. And I believe that it's going to become a political issue. So whoever is in power next will probably determine whether Korea is going to be a part of the future of finance or not. So I think that's going to be a real interesting thing. So what I'd like to do is cover a little bit about BnkToTheFuture.com, the project that myself and Dixon co-founded there. And it all starts walking you through a bit of history in 2006. This was me. I was working as a market maker for an investment bank in London called KBC. And my job was to manipulate the price of stocks up and down to try and drive liquidity. And much like we see in many of the crypto exchanges today, it's very same in the investment bank and traditional markets. I decided after working in IPOs and taking companies public as part of my team that I was going to throw in the corporate towel and quit my job in investment banking. I wanted to return to some of the things that I learned in economics when I was a student, doing a master's in economics at University of Manchester. And I was very dissatisfied with how they were teaching us money, and those assumptions about money are actually driving all of our global economic decisions around the world. And what's ironic about those decisions is that economics is not a science yet. It's a bunch of theories that nobody has reached consensus on. And so you have different schools of thoughts, like the classical economics and Keynesian economics and Austrian economics, and all of them are based upon assumptions that we know are not true about humans. And that actually is built upon assumptions about money that are no longer true. So I was taught in economics that a bank is an intermediary between a borrower and a lender. Turns out that through financial engineering over time, they're no longer that intermediary. They can simply create credit whenever they wish, and they don't really need any depositors in order to do that, depending on what type of bank they are. But when you dig a bit further, I was taught about this thing called a multiplier effect. And a multiplier effect assumes that banks actually have the ability to create money, and therefore, if you control this little fraction of money, then they can multiply it many times further, and that stimulates the economy. When I started to look at that a little bit deeper, it turns out that this thing called fractional reserve banking that is commonly preached, there is no fraction and there is no reserve. So it turns out the banks actually just create as much money as people are willing to borrow and their appetite to lend to it. They don't need anything behind that. It's not backed by any even fraction, because they created the money that backed the money in the first place. And in many countries, you use an investment bank in order to get around any requirements that banks put on that is put upon retail banks. And so I decided to quit my job and try and tell the world about systemic risk in the banking system. The problem was nobody cared. It was the most boring subject in the world. I was one of those people that was reading hundreds of papers that were written about bank charter acts and written by institutions like the Bank of England and looking at the history of money, and nobody was interested in that. So in 2007, I actually stood outside, this is Bliss and myself, and stood outside Parliament trying to get people interested in actually debating money and the problems that were coming in banking ahead. I even went as far as to put a piece of paper with my telephone number saying I got the solution to what might be the financial crisis. And it turned out in 2007 that there was all these loans that set off people becoming interested in money again and economics again. And so in 2008, all of a sudden, hundreds of people were willing to turn up and listen to lectures about money because the entire financial system was imploding all around the world. And so I spoke at about 200 different universities on the subject of money creation and how the economic models that are driving all of our economies globally around the world are based upon some incorrect assumptions of money. In 2009, a little documentary filmmaker came up to me and asked me if I could talk about some of these subjects. And this documentary, 97% owned, was created. I just looked on YouTube and it's got 2 million views approximately now on the subject of discussing money. At the time, you could barely get 1,000 people to watch this. It turned out that the financial crisis was the catalyst that people needed to actually become interested. Here in 2010, I took all the papers that I was blogging about and all the really, really boring parts, and I started to write a book called Bank to the Future. And this book was a fictitious journey where we were traveling in time and we were changing the fate of financial history by going back in time and fixing problems with money, making different assumptions, and then looking back at the future, kind of like the film Back to the Future, if you remember that. Sometimes I tell that to people in China, and they've never heard of that film, so I hope you've heard of the film Back to the Future in Korea. Then in 2011, things changed. I spoke at this conference in Occupy London, and someone came up to me, this gentleman called Jonathan James Harrison. Johnny Bitcoin was his name. And he told me about this thing, and he was saying, Simon, I've sold my house and everything I own, and I've moved into this squat in London in a place called Old Street with this bunch of developers that are working on this thing called Bitcoin. And he sold everything he owned in order to move into that house and be around these developers. So a gentleman, an activist at the time, a guy called Amir Taki, invited me to this conference. And this conference was held in Prague. It's right here. And this was the first Bitcoin conference in the world in 2011. And I gave a talk on the difference between Bitcoin and banking. And to give you a little insight, in the book, Bank to the Future, I identified... Excuse me, I'll just get some water. Yeah. Okay, I'm back. I identified 3 problems with banking. I'll go through those very briefly. The first is and these help you understand the value that crypto brings to the world. Many of you will hold your crypto on an exchange. And when you hold your crypto on an exchange, you are essentially recreating the banking system with crypto again. And that's not the value that crypto brings to the market. Because what happens when you deposit your money at a bank is the bank actually becomes the legal owner of your money. And if you don't believe me, try and land in a different country that your government doesn't want you to be in and try and spend some of the money that you think's yours. Soon you'll find out that it's not yours. Also, try and buy something that the bank doesn't actually want you to buy, and you'll soon find out that that money's not yours. And then if you've generated significant wealth in crypto, try putting it in a currency that's not your national currency, and then you'll find out that the money's not actually yours. And then try and take a large sum of that money and transfer it somewhere else, and you'll realize that that money is not actually yours. It is legally owned by the bank the second that you deposit it at a bank. And when the bank does that, the second property of bank deposits and traditional fiat money is that they can spend it as they wish. And what they tend to do is spend it on the least risky but the highest return thing they can find, which is the property markets. It's why property prices go up all the time. Every 7 years they tend to double. Is because they're taking all the money that you thought was yours and they're using it to lend to people so that they can buy property through the mortgage markets or real estate. The third thing is that the traditional money is if you do not add to your savings, then the value of what you can purchase always goes down over time. You have to work harder and figure out a more clever way of earning money at a faster rate in order to just maintain your savings. And this is what's known as an inflationary currency. It means that your purchasing power decreases over time and you have to work harder and smarter in order to try and increase its supply because you're fighting the economics of the country. Now with Bitcoin, it did the exact opposite, and this was the same presentation that I gave at this Bitcoin conference. The first thing that I realized about Bitcoin after digging deep in order to write and include it in the book was that you actually own it. And so this was the first form of money since cash that you can actually own. And so when you hold it at an exchange, you're just recreating banking. You're giving that the thing that you can own, the money you can own, and you're giving it to the exchange. And so the reason these exchanges constantly get hacked is because they are owning your money when you actually deposit with them. So the real value is actually figuring out how not to hold your crypto on an exchange and hold it on your own wallet. That requires a bit of change in behavior and understanding the crypto market till you can do that. The second thing is that Bitcoin allows you to spend your money as you wish. Because you can own it, it means that you can send it from the phone, if you're storing it on your phone, and give it to anybody else on that phone. And it allows you to spend it as you wish in a peer-to-peer network. And finally, because of the economics of Bitcoin, because it's a fixed money supply, and because it is a completely independent currency to every country, it does not care about employment in your country. It does not care about the goals of your country. It is 100% independent of any political agenda, and therefore it is what's known as a fixed supply deflationary currency, which means that there's only 21 million of them. And if these things become more useful every year, and ever since that conference I spoke at in 2011, every year they become more useful to more people. And therefore, because there's only a fixed supply of them, people have to pay a higher and higher price over time. But people, you know, there's lots of volatility in between because it is a foreign currency to everybody. And therefore, over time, your purchasing power goes up. So it rewards the saver as opposed to traditional money, which rewards the person that takes on debt. So you have traditional money that you can't own, that you can't spend, that has a deflationary policy to it. And Bitcoin allows you to own your own money, spend your own money, and it rewards the saver rather than the person taking on debt. Try take on debt in crypto. You know, these are the short-term speculators that are shorting the market, and they tend to get wrecked at some occasions when they get that wrong. So anyway, that was the presentation. In 2012, more and more people were willing to listen to this message. Max Kaiser asked me to speak on RT. CNBC asked me to talk about the difference between Bitcoin and banking. The BBC suddenly became interested in this stuff. In 2013, I gave a presentation on one of the first TED Talks on the difference between Bitcoin and banking again. And in 2014, I gave a presentation on how the entire financial markets, the IPO markets, the traditional venture capital markets, and the private equity markets were all about to be disrupted by crypto. This word ICOs just came around in 2014. The first one that we invested in was one called Mastercoin, which essentially was trying to take Bitcoin and turn it into what Ethereum later became. And then we invested in things like Storage and MadeSafe and various other ones. And of course, Ethereum came along, which was the first major ICO that started to disrupt the venture capital market. And then suddenly Ethereum became this new thing that Bitcoin was disrupting in retail banking and central banking. And then suddenly Ethereum came along and started making disruption in the IPO markets and investment banking, in venture capital, and started a wave where we had hundreds and hundreds of people all using the Ethereum technology in order to raise funding. In 2015, we started this company in 2010 called BnkToTheFuture.com, and it took us 4 years to secure licenses in order to allow people to invest online to try and do disruption in the venture capital market. We managed to persuade the first regulator in the world that would allow for venture capital investing online, and that was the UK's FCA. The problem was that they wanted us to only work with UK businesses and work with UK investors. Now, our Bitcoin investments had done very well, so we'd stopped trying to build a business that was just catered for venture capitalists, and we started to actually just use the platform to support the growth of the Bitcoin industry. At the time, Bitcoin was the only thing that you had. There was no such real, blockchain wasn't a thing. It was something that worked on Bitcoin, that was part of Bitcoin. In 2015, we decided that we needed to create more of a global vision. So we moved to Hong Kong. We reincorporated with different regulators in different parts of the world, and created a way where global investors all around the world, as long as they qualified, could invest in the deals that were going to disrupt traditional finance. And at that time, very few people were interested in investing in this industry. We became investors in some of the portfolio companies that we did the very early funding rounds for. Some of our companies include Bitfinex, BitPay, Kraken, Bitstamp, BitPayzer, Exodus, Shapeshift, Factum, Airbits, Bitso, and about 100 other companies in the industry. At that time, it was very hard to get investors to want to invest in this industry. The valuations were significantly cheaper than what they are today, and this was very much a niche sector. So we couldn't just take UK companies because there was very few of them that were in this industry, and we couldn't just sell it to UK investors because there were very few in the industry. And then the crypto markets came along, and people just don't think in terms of borders. So then so this is our portfolio today. Then in 2017, the ICOs and the disruption really started to become huge. In 2017, the reason that we saw a massive regulatory clampdown on people using these tokens was, one, there was lots of scams and lots of problems. But secondly, because the regulators and governments all around the world saw the future at this point in 2017. They realized that if they allow this market to continue outside of their reach and outside of their jurisdiction, it was about to gobble up the entire financial industry. People were going to do ICOs just to buy out stock markets. People were going to do ICOs just to repackage, raise funds, and take every part of fiat and put it into crypto markets. I think this year we were part of doing the Telegram fundraise, and the Telegram fundraise took $2 billion of US dollars, cold hard institutional cash, and converted that into the crypto markets. Once it hits the crypto markets, it tends not to leave. You'll notice that the market cap continually over time, yes, there's volatility, there's booms and busts, but the market cap in crypto tends to stay. The reason stable coins like Tether became so big this year is because people don't want to leave crypto. Once they're in crypto, they want to stay. So now with every company, just like Telegram, that chooses to raise funding in this way, in a regulated environment as well as an unregulated environment, brings tons and tons of money into the crypto markets. And so this is gradually chipping away at every aspect of the traditional financial sector. That is a big problem for the retail bank, the central bank, the investment bank, the venture capital industry, and we started to see an exodus away from Silicon Valley, where the worst place in the world to raise finance was Silicon Valley if you wanted to be a part of this industry. So in 2017, we decided to do our own token sale. We are a securities business, so we have to do everything in line with securities. We knew that a lot of the industry was dry, it was getting bigger and bigger in the unregulated markets. But we always knew that at some point the industry would need our suite of licenses and regulations because we just knew that was the only way that we could actually do it, unless you're like Bitcoin, where you actually become anonymous and don't identify yourself. And so what happened in 2017, we went from knowing every single deal in the industry to getting about 50 applications for investments every single day. And the blockchain industry went from, disruption in Bitcoin and trying to just, do disruption in the currency market to every single business, every single sector, every single industry trying to figure out how they can plug themselves into this industry. So the reason that we created the token was, some of our investors were hashed here today, so thanks for the invitation. Kinetic Capital, FBG Capital, and some of the others. And we did it in a fully compliant way. We registered it. We took on some US investors, so we registered with the SEC. We got it signed off by our US broker-dealer and went through the whole process to show that you could actually do a token sale in full compliance with securities law and still maintain a lot of what it meant to actually be a crypto business and do it at the speed that it can actually happen. And our token, the BF token, had 3 different user cases. The first thing is we started to notice that more and more the speed at which things were getting funded. Originally, when we were doing the funding rounds for some of those small exchanges at the time, like Kraken and Bitstamp, it took several months to actually find the investors that wanted to invest. Now, when we launched our token, in 2 minutes and 17 seconds, it was over before I could see the bar move. And so we needed to create a membership token because we were getting access to the deals that people find very hard to get access to because we built a relationship with the industry. And so we allowed people that own BF token to deposit them in their BnkToTheFuture.com account, and they could get priority access to those deals over everybody else. We also decided that we needed to engage the community in order to help us with due diligence. We were experts in finance. We built a history of really knowing how to analyze a fintech deal, a blockchain deal, a Bitcoin deal. But suddenly, all these different industries came in: healthcare, biotech, artificial intelligence, all these things that we had no expertise in how to analyze. So we actually had to engage the community in helping us and supporting us with due diligence and really looking at some of these deals. So we use the token as a reward, and we're building a platform whereby when we're considering investing in a deal, rather than just doing it in our centralized process, we still have to do the due diligence, but we also engage the community and we reward them for their work when they actually scam bust and find things that might not be so true and disclosure requirements that aren't being met. And for their work, we give them rewards, and they get additional data of the types of deals that might be coming through on Bank to the Future. And then the final thing we wanted to do with the token is we decided that this was the year 2018 that we wanted to launch a securities token market. So with all this equity that we built in some of the most valuable companies in the Bitcoin and blockchain industry, more and more people were looking to cash out and try and get some liquidity. And so more and more of our investors were demanding to create a marketplace where we could buy and sell this equity. Because we structured it in a very unique way where we became the institutional investor and hold the equity on behalf of the other investors, we were able to create a marketplace in some of the deals that are just impossible to get hold of today. If you try and get equity in a company today in this industry, one, you're going to pay an extremely high price because they've got all these tokens on their balance sheet that's increasing the value of the company. They're ultra profitable, and it's really, really hard to get the equity now. But tokens has that liquidity as well. People like being able to trade and move in and out. And so what we're trying to do is take the best of equity rights and combine it with the liquidity of some of these tokens. And so that's a mission we decided to dedicate ourselves to in 2018. And by the end of the year, our goal is to launch a securities token market in compliance with international securities laws. And here's some of the headlines that came out. So this was after the token. This was it got picked up as the registration with the SEC. So So far, we've managed to avoid some of those, many of the issues that some of the people are experiencing because of our processes that we put people through when they list and launch on our platform. So what did I have there? I missed the... Yeah, so this is our marketplace that was picked up by Bloomberg, and that's kind of the next challenge that we're wanting to focus on. One of the reasons that we want to do a marketplace is because we return back to our original vision. We believe that Bitcoin was going to disrupt so many aspects of finance and get bigger and bigger and bigger and gobble up more and more of the traditional financial system. Well, what tokenized securities does is it allows companies like Telegram that don't necessarily have a business model. They had nothing to pitch to the venture capitalist. But when they put a token into their business model, all of a sudden, they don't need to sell advertising like Facebook. They don't need to sell adverts like Google. They don't need to really upset their customers by selling their data, all because they've created this brand new business model that didn't exist before called create a token, and the more people that use the technology, the likelihood that this new marketplace of a very strange thing could come along. I believe more and more companies are going to be doing this. And so throughout this whole period, we saw booms in the following markets. It all started with Bitcoin, the original theses that we believed. We believed that the invention of money that you can own, money that you can spend, and sound money was going to become more and more useful to more and more people. But every year it becomes more useful because people don't realize they need it until they realize they need it. The people in Cyprus didn't know that they needed money that they can own until the banks took their money and bailed it in. The people in Greece didn't know that they needed money that they can own until the ATMs were shut off and people could no longer withdraw cash. The people in India didn't know that they needed money that they can own until the governments took their large denominated notes and made them queue outside banks with their life savings in bags, risking their life while people were trying to steal their entire money because they wanted it washed through the banking system. The people in Mexico didn't know that they needed money that they can own and sound money until Donald Trump became president, and Donald Trump started talking about what he was going to do to the future of Mexico and American relations, and that made them 25% cheaper and added massive volatility into their currency. The people of England didn't know that they needed to own their own money until they decided that through an election that they were going to leave the euro, and they lost 25% of all their value and had to leave all the money in the country because of the volatility with the pound, the euro, and the dollar. And so all that needs to happen from here for this industry to thrive is it just needs to continue doing what it already does. The killer application of Bitcoin already exists. It's called Bitcoin. Allowing you to own your own money, spend your own money, and have a monetary policy that is independent of whatever politicians do is the killer application of cryptocurrency. And so Bitcoin became the original thesis, and then equity became something you could invest in that became highly valuable. We now have 5 unicorns in our portfolio. And then everyone tried to compete with Bitcoin and look for different user cases. They tried to create scams. They also tried to create genuine technological innovation. They tried to improve privacy. They tried to improve governance. They tried to improve scalability. And this created way more speculative opportunities, but another bubble and another wave. And then from there came Ethereum, and Ethereum, once it was built, turned out that the application of Ethereum was disruption in capital markets. And so ICOs and tokens became this huge thing. And then suddenly you got rewarded just for owning Bitcoin. Just for owning Bitcoin, you got free currency because the Bitcoin community couldn't agree on where to go next on how to scale it to the next stage. So you suddenly got a double currency just for owning it. And it's kind of like a dividend just for owning and rewarding people for holding it and holding it off exchanges. Owning their own money, spending their own money, and a sound monetary policy that tends to create different monetary policies that come from it as well. And so what happens next? Well, as I said, I think it's the securities token market next. The reason that I'm interested in this is because everyone now is looking at this market And all the traditional players are getting involved, all the brokers, all the banks, all the institutions, and they're all trying to tokenize every single asset in the world, whether it's gold, whether it's currency, whether it's real estate, whether it's stocks. But what the beauty of this is when you tokenize these assets, they all get traded against the world reserve cryptocurrency of cryptocurrencies, which is Bitcoin. And so what it turned out, when we saw this boom of alternatives all trying to compete with Bitcoin, it increased the utility of Bitcoin because they were all traded into and out of Bitcoin. And so we saw the market just grow and grow and grow and grow. Now we're in a much needed correction. It got far too speculative. But please do not make the mistake of giving your Bitcoin to the central banks, the institutions that are all buying up Bitcoins as a result of this correction because they missed the boat. All because you haven't got a long enough time frame to look at these things. And so here's some of my 2019 forecasts that I think we're going to see. So at Bank to the Future, what we do is we find a deal that we think is worth investing in, and we allow people to co-invest with us if they're a qualifying investor through our platform. And some of the things that we're looking for, some of the trends that we think are the next big trends in 2019, is we believe that there will be two very, very big markets. There will be a fully decentralized market where people take their hardware wallets and they will be able to trade in a decentralized way with other people's hardware wallets and fully own their own money, spend their own money, trade their own money into all these different asset classes. And that will be done through decentralized exchanges, and there will be a certain type of person that's willing to do that because they want to own their own sovereignty. That is going to be a huge market. That is not going to be invested through the equity markets. VCs are not going to invest in these markets. It's up to the crypto community to invest in these markets. They're going to be big. They're brand new business models. There will be lots of scams, lots of failures, lots of problems along the way. This industry has not changed that. But decentralization of these different aspects is going to be an industry that we're looking to support and even disrupt ourselves eventually. But I'd also believe that the regulated markets are going to be huge as well. Every single fund manager in the world, whether they believe in cryptocurrency or Bitcoin or not, they have to buy Bitcoin if they are a responsible fund manager. Because a responsible fund manager needs an uncorrelated asset. And an uncorrelated asset means whatever happens to the stock market, whatever happens to the bond market, whatever happens to the real estate market, they need something that works differently. And Bitcoin has become an asset class to those people. So every fund manager, even if they realize it now or not, is still going to have to purchase this asset. There's only 21 million of them, and they're getting more and more useful every single year. You've got to have a long-term time frame, because when you understand the economics of Bitcoin, you'll realize that the supply halves every 4 years, and in 2020 we enter the next halving, and really understand the economics of this as it becomes an asset class, as it becomes decentralized, as it has a regulated market where people deposited at exchanges decide not to own their own money anymore because the regulators are forcing them to do it in a way that they understand. And I've got, there's some companies that is literally, in order to satisfy regulators and fit it into their traditional understanding of the world, they're clearing it through a blockchain, and because the regulators are forcing them to keep records of that, they're printing it off and putting it in the filing cabinet to prove that those registered assets work in the way that they traditionally understood, just to meet regulators. And all these fund managers are going to have a regulated custodian that allows them to do it so that they can risk their money by recreating the banking system, and that industry is going to boom and grow simultaneously. The regulated markets and the unregulated market, two different user cases, one crypto market, they will both boom, is my next forecast. And so we're looking at both of those. I believe that Bitcoin's going to become the world reserve currency. It was already the world reserve currency of cryptocurrencies. When all these assets get tokenized, it's going to become the world reserve cryptocurrency of all digital assets. When the government starts tokenizing their currencies, then it's become the world reserve currency of cryptocurrencies when small when small central banks realize that if I want to compete with some of the superpower currencies of the world, if I'm a small African central bank, what do I want to do? Well, I want to allocate a portion of our country's electricity into mining Bitcoin. I want to bet on something that could become bigger than the financial system. And so the small central banks, in a David beat Goliath moment over the next decade, I believe are going to be the first to adopt this. The US will be the last. The US has the most to lose from this. The US dollar is the most powerful world reserve currency, and it's the most powerful store of value other than gold. And gold is priced in dollars, and oil is priced in dollars, and all the funding and the bond markets come from Wall Street, and all the funding for the companies come from Silicon Valley. Well, cryptocurrency disrupts all of those in some way. How big it gets, it doesn't really matter, because all this industry needs to do is carry on doing what it's already doing, and all the traditional financial markets need to do is carry on doing what they're already doing, and you will have the market cap of crypto bigger and bigger and bigger and dwarfing the traditional. I also believe that all the governments in the world, every central bank is preparing for what they do during the next financial crisis. Because remember, the financial crisis did not fix anything. You still can't own your own money with traditional fiat. You still can't spend your traditional fiat money. And it's still based upon debt that cannot actually be repaid. We still have that. So what are they going to do in the next financial crisis event? We don't know where it's going to come from. Originally, it came from a small place like Iceland, or a small place like Greece or Cyprus. No one knows where the next event's going to happen, but we know it's going to happen. And during that next systemic risk event, which does the exact same thing that it did 10 years ago, that they've been using financial engineering in order to prop up, they're going to do the exact same thing, but they're going to use this buzzword called blockchain. And what they're going to do is create things that aren't blockchains, that they call blockchains, that are centralized database, whereby the retail bank can go bust. And this time, rather than having to bail it in and risk the entire reputation of the banking system, or bail it out where they take taxpayers' money, what they're going to do is they're going to allow the bank to go bust this time. But that would be a disaster for the economy, because they don't want people losing their money, which is why they were too big to fail. But they're no longer too big to fail, because the central bank can print their own cryptocurrency and replace the currency that the retail bank created. So everyone that had a bank account can go to the central bank, download a wallet, and they'll give them this new cryptocurrency that they're calling a blockchain that's got nothing to do with blockchains. And what that will do is it will make the user experience of using money worse. The reason it will make the user experience worse is because at least now it happens through the bank, and a bank is one step removed from the government. But what happens when they automate tax collection because they believe you owe them some money, and you don't actually owe them, and you don't need to go through due process anymore? What happens when you go to the wrong country and they switch off your passport as well as your wallet, because the central bank has these currencies as well? What happens is that you will use them because they're stable. The reason they're stable is because when you think in a domestic currency, you think in terms of your national currency, and you have no volatility. But you will gradually take some of that savings and you'll put it in things that you can own, that you can spend as you wish, and is based upon sound monetary policy. And that's going to happen to more and more and more people. But you are all still complete early adopters in the beginning of this industry, because still 3/4 of the world still think that this is a scam. And that's why this is such an undervalued asset class, in my opinion, because most of the world still think that this is a scam. They haven't figured this out yet. And if it meant that you got involved in this because you were trying to create a startup and you realized all the funding is in crypto, or if you got involved in this for whatever reason because you wanted to speculate and you realized for the first time a student's destiny was to take on student debt, and then they were going to go to university and get a job and realize that they needed to take on a mortgage, and that debt was going to carry on and on and on for the rest of their life, and they were never going to save and never going to invest. But suddenly, because of crypto, they're suddenly coming along, and you can call them speculators, whatever you like, but for the first time, they're thinking of savings and investment, and they're looking at what cryptocurrency interests them, what ICO interests them, what token interests them, because they have a connection with, for whatever reason, and now they're thinking of savings and investing for the first time. This is a movement away from a debt-based economy to a savings-based economy. And that savings-based economy does not care about the agenda of any one country, but the country that decides to support it is going to be the ones that have the most disruptive force and the most opportunity to see this really, really once-in-a-lifetime shift in financial history. So I believe today is the most exciting time to be alive in financial history, and everyone that's in here is in a really unique situation. So I think I've done my 40 minutes, haven't I?
You did an amazing job.
Thank you. I don't have time for questions, do I? Or?
Yeah, you still, yeah, it was...
I can take a couple of questions, then it's the next speaker, right?
Sure, yeah.
Okay.
Okay, there are lots of hands, so let me pick that gentleman first.
Celera, SEC. Actually, that I heard illegal stock sold.
Yeah.
Yeah.
So
yeah, actually, one Korean lawyer requested the Supreme Court in Korea. He won of Korean government illegal ban ICO, for example. Second question is actually you said to financial crisis or other thing. Actually, these days, crypto exchange market is more great. So I think in America, Robinhood, 0% trading fee. And other thing is DEX or decentralized exchange. Could you introduce in the future of exchange market?
So the first thing to understand is that this thing called the Bitcoin blockchain cannot be taken away no matter what. The cat's out the bag. This invention is here. The internet's been invented. Of finance, it cannot be uninvented. So what is the government going to do when they realize that there's this force that's happening? Well, they're either going to do what China did. So what did China do? Well, they said, okay, first thing we're going to do is we're going to ban all exchanges. So what that meant is that all the people that wanted to trade cryptocurrencies went to Japan, went to Singapore, and went to Korea. And suddenly all the data from the Chinese residents that were actually trading cryptocurrencies left China, and Korea, Singapore, and Japan got all the KYC data on Chinese nationals. Yeah? And so what the China is going to realize at some point is that they just gave away all the data to their competitors. There's a reason why they banned Google, is because they don't want America to have all the data on their nationals. So now they have to come back and realize, wow, people are mining this stuff. They're taking renminbi, buying machinery, getting Bitcoins out, and putting them on a Korean exchange. And so what they're trying to do is having the exact opposite effect of what they originally wanted to do. The smart country will realize that this decentralized thing is growing and growing and growing, and our only combat to this thing is to create a regulated environment where a large percentage of the population follow the rules, follow the laws, and do the KYC, and then we get some kind of control over that data. And then what the decentralized exchanges are going to do is say, we don't want to have all that control, and they're going to compete and they're going to fight. And those decentralized exchanges are going to exist. And because there is competition in countries, because now people can travel and go around the world and they think more globally, and this next generation of young people that were never going to invest in stocks, never going to invest in real estate, never going to invest in bonds, are all interested in the cryptocurrency markets, and they're fleeing to other countries, or people are just doing it through another country. So the governments are going to just go through this ping pong back and forth until eventually there is a very sophisticated regulated market and a competing decentralized market that keeps the regulated market more honest and keeps the regulated currencies more honest, because now there is no longer a monopoly on your national currency. The Federal Reserve used to have a monopoly on the US dollar, But then they gave it to the banks that allowed them to create their version of digital currency. And now Tether comes along, a private company, and issues its own US dollar backed by crypto. And Japan's going to come along and create their own version of the US dollar backed by crypto. And an entrepreneur and a company and a bank, and they're all going to come along. And suddenly, we've got no monopoly on a national currency. So if you treat your nation and you try and control them through that national currency, they now have choice of what to do with that. That is a big problem. All of the governments are going to wrestle with this all around the world, and they're going to realize the only way to go with this market is to embrace it, create a regulated environment, and the ones that didn't get it right are going to be the ones that are left behind. And so the ones that are thinking right are thinking about doing that, and that's why Japan's the leader in this market, and that's why Korea is sitting in the middle. And its destiny in terms of disrupting Silicon Valley, disrupting Wall Street, is in the hands of the politicians right now based upon their decisions about how they react to this invention that cannot be uninvented.
Okay, thank you. We can accept maybe 2 more questions.
Hello. So the largest bank in South America recently just created Coin, which is an inflating currency as opposed to deflating currencies, with the goal of recreating the problems beforehand now in the crypto space. With your background, how do you see these inflating currencies that will be created by future governments and central banks counteracting with the deflating currencies?
I think that inflating bad currencies are very important. The reason they're very important is if you are a country and you need to create stability within the currency so that when you pay your rent each month, it costs kind of the same, that you have to have centralized planning unless someone's going to create this whole, I don't know what that looks like, global, stability, hype. I don't know what that world looks like. But in the meantime, if you're a very poor person and you own Bitcoin or Bitcoin Cash or whatever, or Ethereum or any of this stuff, and you are literally 1% away from not being able to afford your bills, you can't use crypto. But what you can use is you can save in a cryptocurrency if you actually reach that stage, and you can use stable coins to actually enter and have this thing. Now, in order to have stable coins, every country still needs to optimize inflation and deflation targeting based upon the goals of their country. That creates crypto more useful. And what you do, just like when people are arguing right now about Bitcoin versus Bitcoin Cash, the thing that people don't realize is the reason that people don't spend Bitcoin is because they don't want to be Bitcoin pizza guy. They save it because everyone regrets the Bitcoin that they spent. And so what happens is you naturally gravitate towards this market of savings because it's a fixed supply. And if the utility is realized, i.e. cash, digital cash, then it goes up in price. And as it goes up in price, people stop spending it because they want to hoard it. And so what you end up doing is you spend your dollars and you save your Bitcoins. And so it's disruption within savings that does this. And for the first time, some of these people that are on the breadline, on the borderline, they still need their stability because they can't afford volatility. But if they can actually take a tiny portion of that and start saving, there's this global savings account called cryptocurrency that, yeah, it's crazy. Yes, it's volatility. Yes, there's scams. Yes, there's lots of problems. If you pick the wrong one, never invest more than you can afford to lose. But the fact of the matter is it's a force that's based upon not debt, not expenditure, but based upon savings. And that changes everything. So you do not want Bitcoin to take over the entire world. You do not want hyper-Bitcoinization, because you don't want people still think in dollars. They still think in Korean wons. And you're going to need these inflationary currencies in order to teach people why they should hold them in deflationary currencies.
All right, I can accept one more question, and lady has.
Thank you for such an inspiration. I just want to ask you a simple question, which is that in that decentralized economy that you vision, what would be a possible scenario of crypto crisis?
Crypto crisis? Well, I think the biggest crypto crisis are always scams. So in a decentralized world, you have to expect that you're going to be dealing with incredibly shady people, people that just want to steal, lie, and cheat and take all your money. And that comes with decentralization. At the same time, it creates a force like Bitcoin because of decentralization that changes the entire destiny of the financial world. It comes, it goes, you have regulations. The thing is that this technology, I do not believe, it doesn't change human psychology. There's still scammers, there's still people that are going to benefit, there's still people that don't benefit. I believe that decentralization just creates another opportunity for a redistribution of wealth to the people that are just, and unfortunately we're in a speculative economy, and the decisions you make every single day is speculation. If you choose not to understand cryptocurrency, you're speculating on your government's ability to be responsible with that currency. If you choose to invest in the property market, you're speculating that banks will always take a percentage of your money and put it in real estate. Every decision you are making is a speculation. We are all speculators. We just need to understand what we're speculating on. And decentralization creates another form, another opportunity that exists outside, but the risk of it is that you got all the scammers and all the nasty people that all want to do harm to you. But then that's it. That's what it changes. It doesn't change psychology. We're not going to suddenly all become honest, caring people as a result of decentralization.
All right, thank you very much for your Q&A session. So once again, thank you to Mr. Simon Dixon.
Thank you.